The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast, where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
Welcome back. I'm here with Bryce and Alec, or Ren, from Equity Mates. We're just discussing, and apparently you like being called Ren.
I respond to anything.
Either or.
I do probably need to decide what I want to be called, because right now people ask and I don't have a good answer.
Yeah, I think when I listened years ago, I was like, is there 3 people? Is there 2? Yeah, but no, I know.
You're not the only person
fine.
who said that. Yeah. I speak enough for 2 people, so.
Fair.
Yeah.
Today we're going to chat about our first investments, best investments, worst investments, and maybe some investing lessons as well. But first, our money wins or losses. Bryce, do you want to go first?
Sure. So a money win, for a while I hadn't sorted out my life insurances. And doing all of this content, I'm like, I need life insurances. My biggest reason for not doing it was because I thought they would come out of my cash flow. And I didn't want to pay for them because I was just like, I need the cash flow. And the win was discovering that regardless of if it's inside your super or elsewhere, you can actually get it absorbed by super, and or for some like income protection, it's a tax deduction. So a bit of a win there to actually understand my life insurances, and now I've got them set up. So I'm happy with that.
Nice.
Yes.
Do you have all of them? So life insurance and
life, trauma, TPD, and
no, trauma is TPD, isn't it?
No, there's no total permanent disability and trauma, life, and income protection.
Yeah, all of them.
So I got 4, yeah.
All of them.
Yeah.
Amazing.
Well, the way it works is, here we're going to go down a rabbit hole. And look, I found this experience actually quite good because I didn't realize how your default cover is just absolutely, it's just not enough.
Yeah.
And the reason I got all 4 is because when you actually go and get the policies, it's cheaper and more effective when you look at what's going to be covered if you tie all 4 in together. So like trauma and total permanent disability are likely to be linked. And so one will cover one component and then the second will then come in and substitute something else. So your total repayment or your total cover is greater. I'll just leave it there.
Oh, yeah. Bryce and his insurance broker literally sat down for 45 minutes and discussed it all in great detail. Luckily, I didn't have to be there. So if they want to go deep on insurance, Equity Mates Investing, you can listen to Bryce do what he just did there for 45 minutes.
Amazing. Yeah, we did one a little while ago with someone called Narina, if people want to scroll back on that one too, just all about insurances. But she said that trauma is often most claimed, but I feel like it's left out of the conversation quite a lot. So we think, total and permanent disability, but often we will maybe have a heart attack or get diagnosed with cancer a lot earlier on.
That is the 4th that's the one that you can leave out quite easily. Yeah.
But the one we often don't really bother getting because it's not included. But worth considering.
I got to get that sorted at some point. Yeah.
When?
Soon, hopefully.
Yeah, you're up next.
Heart attack could be any day now.
Anna always makes me promise on the podcast when I'm going to do something so then she can check in to see if I've done it. And that's the ultimate accountability.
Oh, that's good. Yeah. I like that.
Well, we've got it scheduled into our content schedule, so you need to do it.
Every aspect of our financial lives we make content about.
Yeah.
So, yeah.
It's a bit dystopian sometimes because I feel that as well. When I do something, I'm like, that's good content. And I'm like, I'm not made to just make content all the time.
Yeah. My I had dinner with my fiance. Her parents were in town, and so we're having dinner. And they were saying, "Oh, it's nice. We sometimes hear what's going on in your and Alice's life through the podcast." And I was like, "Oh no, what am I saying?" But
that's our job.
Yeah.
What's your money win or loss?
So my money win is I actually got a free book recently, How to Not Work Forever, a great book. And all I had to do to get it for free was 7 years of podcasting. So
amazing.
That's a money win.
Amazing. Get on the publicist list.
Yeah, but a really good book, and congratulations.
Did you actually read it?
I did.
Really?
Yeah.
Wow. Okay.
Yeah.
I'm impressed.
Yeah, you got to do the work,
Yeah. Yeah.
Yeah.
Thank you.
No, it was good. It was good. Well done.
Thank you. Mine's kind of book related as well. There's a bookshop in Canberra called like Book Lovers Lane, and it's run by Lifeline, but they do like secondhand books. And I got 7 books for $36, which is pretty cool.
Wow.
Yeah.
That's great.
Yeah. Big win.
Yeah.
I've been reading a lot recently, so it's been good.
Yeah. Nice. All fiction?
Yeah, mostly. Yeah.
Yeah.
I don't love nonfiction. I find it a bit hard to get into. Like it's not exciting and often it repeats itself a bit much. Yeah.
Nice.
Yeah. Do you guys read?
Nowhere near as much as I should.
Yeah, I do. I try and go one fiction, one nonfiction, because otherwise I just will end up not reading fiction, and I feel like it's valuable to read.
Oh, so valuable.
Yeah.
I read Honeybee recently. Have you read that one?
No, but I read a bee related, The Bee Sting.
Oh, that was good. Did you like that? Oh, what did you think of the ending?
Sad.
Okay.
Yeah. Also, the Imelda sections where there was no punctuation.
Oh my God, that was hard.
to read.
Yeah. Hard.
No punctuation.
No punctuation.
Line breaks?
I was reading the Kindle version and I had to stop and Google and see if the Kindle version was broken.
Oh, really? I read about it before and it almost put me off reading it, but it was actually done fine because they've got capital letters so you can kind of figure out what's happening unless you're talking about names.
Yeah.
But I read someone saying that whether you thought what you thought happened in the end kind of showed whether you were an optimist or a pessimist.
Without giving anything away, I'm certainly a pessimist.
Oh, okay.
Yeah. Optimist?
Mostly. I could see both, but yeah. I was just like so sad it ended because I hate when they don't tell you what's happened at the end. I need like a follow-up chapter. So I was Googling on Reddit being like, what happened? But yeah, no one knows.
Yeah.
So sad.
Anyway, we won't give spoilers away.
Back to investing. What were your first investments?
My first investment was in a company called Brickworks Limited. Brickworks Investments Limited, not to be confused with Brickworks Limited. It was a listed investment company, IPO'd in about 2003, and we got in on the IPO. The story, though, is that my parents had encouraged me to split my money and invest years leading up to that moment. And it took me, I think, 6 years or so to save the first $500 that was required to make that investment. And when I hit that $500, we made the investment. I didn't know anything about it. Dad was just like, listed investment companies, well diversified. This is all you need to do for the rest of your life, because ETFs weren't a massive thing back then. And that was the beginning of it.
Exciting. Did it do well? I've got no idea what they are.
They just take the pool of money and invest it across a range of companies. I think I got in at 90 cents and it did what it was supposed to. It didn't lose any money. I think it sat at about $1.50 for it oscillates between $1.50 and $1.70 for years on end and just pays good dividends.
Oh, nice.
I eventually sold it because I thought there was better opportunities. I was sick of the lack of capital growth. But for many years, I think the first, 5-10 years that I was doing it, that was like my investment of choice.
How old were you?
Year 6.
Oh, wow. Crazy.
Yeah.
What, like an 11-year-old?
Yeah, 13, I think, 12, something like that.
Crazy.
Yeah. So
wow.
I didn't make the investment. So the point was my parents were teaching me the principles of it. They then invested it in their name. And then when I hit 18 and could have my own brokerage account, Dad did a share transfer and transferred it into my name so I could take control.
Amazing. What
Sold
a fun
it all,
idea.
went to the pub.
No.
I definitely didn't. Didn't do that. I definitely didn't do that.
So good.
Yes,
What was yours?
So if Bryce's story is a story of like how you should teach a kid to manage money and think about investing, split your income into different buckets, save up and invest. My investing start is the absolute opposite of that. I didn't learn anything about investing in the stock market growing up because my parents didn't learn anything about it when they were growing up. And, for them, like so many Australians, it was you save for a house deposit, you buy a house, you spend your life paying off your mortgage, and that's how you build wealth, the great Australian dream. And I was, I guess, in hindsight, lucky enough to meet Bryce at uni. We lived together. We tried to start some terrible businesses while we were at uni. And
Like what?
Very quickly, we tried to import a shipping container of secondhand European clothes vintage clothes and try and sell them. We had plans to put the shipping container on the backyard of our share house. There was like a concrete slab there. We were at ANU down in Canberra, and all the food options on campus closed at 6. And so we were like, why don't we? But the library's closed at midnight. So we were like, we'll go and sell food down near the libraries for students studying. For some reason, we decided soup was the
Oh, you actually did it?
No, we made a lot of soup at home.
We made
Ate a lot
the
of
soup. It didn't leave the kitchen.
Never sold any. So things like that, uni student things.
Yeah.
But along that journey, we were also talking about investing, and I was learning about this whole world, and my eyes were sort of open to, what was there. And I was reading the AFR, thought I knew more than I did, saved up from my part-time job at uni, the first $1,000, put it into a law firm that was getting a lot of headlines at that time, Slater and Gordon. Less than 18 months later, Slater and Gordon had collapsed, and I had lost so much money on that investment that I couldn't cover the brokerage on CommSec to sell it. Yeah.
Wow.
So if you are out there thinking that you don't want to start investing, you cannot have a worse start to your investing career than I did.
Yeah, amazing.
Yeah.
How did you get over that?
I was young and dumb, and I just got over it. Probably took some of Bryce's Brickworks money down to the pub with him. But I think what really got me hooked on investing was my second investment was A2 Milk, which had again, was just in the AFR, bought it, had no idea what I was doing, but it had a really good run with the whole China story, and I made more than I had invested in that. And I quickly realized that there's kind of like an asymmetric upside in investing. Like you can only lose 100%. You lose what you can invest if the worst happens, but you can make a lot more than that. And so I think from there I was kind of hooked that like, there's money to be made if you do the work and you're not an idiot.
Yeah, definitely. Did you keep buying individual companies after that?
For ages. Like really until we started the podcast, maybe like 4 or 5 years after I started investing, ETFs just weren't really spoken about. They weren't really a thing. Like it's amazing how recent they are in the investor mindset and how much they are now front and center. And yeah, so for the first few years of my investing, it was all individual companies.
What made you finally buy something index-based? Because I know there was like managed funds back then, or like you said, listed investment companies.
I think we started, I don't really know what the first, we started doing content about difference between LICs and ETFs, and you start to unpack, the difference in the structure and stuff like that. We started doing some content with beta shares in the early days, and like I think speaking to them helped me understand it. But yeah, I think it's just like reinforcement over and over again, learning about them and yeah.
It was also because at that time, leading into 2020 and then through COVID, like when you started seeing what the index was just returning, like 25+%. I remember one year it was like in the 30s or like high 40s or something, and it was just like, why do you need anything else?
Yeah, why would you not do this?
And it just became very clear on the benefits of just taking the index.
I reckon part of it is also growing up a little bit and changing from my mindset of like, I want to get rich quick to like, there's a way to get rich slow, if you don't mind me stealing the name of your show. And I think once you're like, okay, this is going to take longer than maybe I was hoping at 20, but it's doable, I think you sort of...
Yeah, and realizing that it takes a lot of time to research companies as well, unless you really enjoyed that. But I find that so not fun, and I don't want to do that at all.
Yeah.
Not for me.
I love it. I'm just mindful that like I'm competing against people that have a lot more time and a lot more information and a lot more experience than I do. So I don't kid myself into thinking that should be where the majority of my money should go. So it's like that core and satellite approach. But more of my money goes into the core.
Why do you think listed investment companies aren't really spoken about kind of as much as they used to be? Because ETFs are just better?
Don't get Bryce started.
Okay.
So I don't like listed investment companies anymore because of the mechanics of it. What I mean by that is when you're buying a listed investment company, you're not actually buying the underlying asset and you're just getting that underlying asset. You're actually buying into that company on the stock market. And so what drives the return is actually just stock market behavior, supply and demand. The underlying investments could do incredibly well, but if no one knows about this listed investment company and no one's buying the stock could just plateau. Whereas when you're buying an ETF, you're getting access to the underlying investments directly, and not to get into the details of how that's done, but when you're buying and selling into those assets, and it's tied to the performance of those assets. It doesn't matter how many people are buying them. It doesn't matter how many people are selling them. And so I think for that reason, but also because like you're buying the index. You're not actually getting someone to go and pick stocks, for example. Yeah.
I think it's fair to say that the ETF is a better structure for the investor. The listed investment company is a better structure for the manager.
Oh, interesting. I never really wanted to buy them like listed investment companies at all, but then I saw the Barefoot Investor recommended one in his book. And in my mind, I was always like, oh, is that a good option or not? But ETFs just seem so much simpler and easier.
I reckon if Scott Pape, if I can use his real name, rewrote it, he wouldn't write about what was the listed investment company?
I think.
AFI?
Yeah. Because like when he wrote that book, listed investment companies were the thing. Like that was the sensible long-term dollar cost average into it. It's accessible for people from, well, then it would have been $500. But I reckon if we asked him, he would say,
I'm pretty sure he's taken it out because he had to, from what I've heard. I haven't bought the newer editions, but I think like ING and all the direct stuff has been taken out.
Really?
Yeah, in the updated versions.
That was a great thing about that book though. It was like very specific and actionable. Yeah.
And I still see people with their ING cards today with Splurge or whatever written on it. It's crazy.
Definitely.
Okay, something less fun maybe. What were your worst investments?
From a percentage point of
yours has already been answered. Maybe just Bryce.
It couldn't be much worse than that.
one of mine was quite recently. It's still in my portfolio because I kind of just have it there as a reminder, but it was called Voltaic Resources, and it was from a hot tip that I got from someone who walked into our office and was just like, this is the next best thing. And percentage-wise, it's been the worst investment I've ever done. Dollar-wise, no, but just a good reminder. I literally bought it because I got caught up in two of our colleagues also buying it.
Oh, no.
And they've also lost money. Yeah.
You have a few stories like that. There was another story of a stock tip you got from another one of our mates.
Yeah, that was a number of years ago, way back when we were still at uni. Same thing, knew nothing about it. He pitched it, I bought it.
He sold, didn't tell you he sold.
Didn't tell me.
Yeah, the classic, you know.
Yeah. So yeah, not great. I think others similarly where I've sort of come unstuck is buying thematic ETFs and not paying enough attention to the thematic and or not necessarily understanding the underlying thematic and where it is in the cycle properly.
So
I've come unstuck a little bit there.
I bought that crypt beta shares one because I thought other people would buy it as well and it would be interesting, and like crypto was doing very well back then, all the companies were being exciting, but that's done terribly. That dropped so quickly.
Is that your worst investment?
No, mine was buying the BBOZ ETF during COVID.
That's the
Which one's
negative
that?
inverse?
The leveraged one.
Yeah.
When the market crashed, I was like, there's no way it's going to recover. Like,
And it just
we're
ripped.
going into lockdown, the world's shutting down. Yeah, so I put like $4,000 or $5,000 into it, and then just the market went up straight away. So that was fun. And it just kept going up, and I was like, surely it'll crash again, but no.
I got so into those leveraged back in the days, but they were all those synthetic ones, BBOS and there's another one that's listed on the New York Stock
The B-Bus one or
B-Bus
something?
or something like that, and far out. If you can get unstuck with those quite easily.
It's good in theory, but the stock market doesn't really behave how you want it to, and it's not rational all the time either, but that was a nice learning.
I actually don't think it's good in theory. I love, so there are some people who don't like short sellers. Scott Phillips famously, well not famously, but it's stuck in my mind, thinks short sellers should be banned from the Australian market, which I just think is silly.
Yeah, interesting.
But I think in terms of creating an ETF that's available to retail investors that allows you to short the market encourages all the wrong kind of investing behavior. It encourages you to try and time the market and, actively trade the index. And it's just like, I don't need that.
No.
People can make a lot of money just being sensible.
Yeah, I did the other way, like bought the gear ones. Yeah, gear, I think it is. Yeah, where
gear
you
and
actually it's just like the leverage goes up if the market goes up, and they did well for a while. That was good. But definitely not the other way around.
Yeah,
but I'm still doing that.
They're Bryce's core holdings. So
really?
Yeah.
Interesting.
Yeah.
Why?
I like the leverage.
Yeah.
But they're also structured differently. So the structure for the ones that we were talking about, this is going to get a bit complicated, but they're not actually invested in the market. There's derivatives underlying them. And so they're trading on a daily basis, whereas the beta shares ones, they are actually going out, borrowing money, and then still using that to go out and make the investments. So the structure of them is a little bit more beneficial for longer term. And that's why I kind of preference them.
Yeah,
They're set up for it rather than set up to manipulate daily activity.
Yeah, I haven't heard of anyone else publicly say that they're buying them for a while, so that's fun. Interesting.
I'm
have to go back and have a
Mr.
look.
Transparent.
So many people told me they were terrible ideas, and I was like, okay, cool, I'm not listening anymore. It's fine. But yeah,
No.
interesting.
Yeah.
Okay.
I mean, there could be terrible ideas. It's Bryce.
Buy them as well.
I did, but I don't at the moment. I just VAS, and for the US, it's one of the S&P 500's IVV or one of them. Yeah.
Yeah, nice. And best investments?
Best investments was Afterpay.
Oh, yeah, interesting.
Yeah. We spoke about it on the show. I remember we did back in the day, it was like a stock deep dive or something. I can't remember whenever we were talking stocks.
So Bryce planted his flag with Afterpay, so much so that his colleagues at Woolworths, where he used to work back in the day, still remember him as the guy that picked Afterpay at $2.
Really?
Yeah.
What a flex.
Well, they all got in on it.
Yeah.
And they also made a fair bit of money as well,
Yeah,
which
nice.
is good.
That's fun.
Yeah.
That was when Equity Mates peaked.
We're trying to search for the next Afterpay.
Best investment, I should say something like, my education.
Career.
Or,
Starting a business, the podcast.
Yeah, podcasting, making financial
My
content.
wife.
I'm not married yet. But A2 Milk was good for me back in the day. Yeah, that's probably in terms of percentage return. That was incredible. But yeah.
Yeah, I think mine has actually been my apartment, just looking at the numbers, because I bought in Perth and Perth has just done really well and it's like ridiculously positively geared at the moment. So that's been quite fun to see.
Oh, nice.
Yeah. So percentage-wise that, because I didn't use all my own money. But yeah, otherwise IVV from 9 years ago.
Nice.
Yeah.
Classic that it's, we're an Australian investing show. It had to be property.
Yes. Yeah. And it's not even a house either. Imagine if I bought a house, but never mind.
Imagine.
Thank you so much for coming on my podcast as well. You guys have written a few books as well. What are they called?
Written a couple. Get Started Investing is the first, written in 2019. No, 21. 21. Everything you need to get started. But then the most recent, Don't Stress, Just Invest.
All about automated investing for all of our friends who would never listen to our podcast or read our first book. We thought we'd write something that they can just set it up, move on with their lives.
Amazing. And I'm sure everyone has probably heard of you guys already, but if anyone listening hasn't, your Get Started Investing podcast is probably a really good place to start for anyone who wants to jump over to your podcast too.
Yeah.
Nice. Yeah.
Awesome. Thank you.
Nice one.
Thanks,
Tash.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Anna Christina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.